Good morning, Charles Spartans. We're in very dangerous territory for the health of the economy, and markets are signalling some impending doom. This might not be in the next couple of months, but within the next year, it's highly likely that there will be a significant event either in financial markets, the economy, or in geopolitics. Now, the signal I'm looking at is yields. And in 2022, we've seen a massive surge in yields up to this resistance level, and we have now broken past this resistance level. We can also tell that yields are the most overbought in the last 40 years. And whenever we have seen this situation of surging yields close to this downward resistance level, we get a significant event in the markets. In 2018, when we had the balance sheet run off by the Federal Reserve, it led to the taper tantrum and subsequent stock market crash. In 2007, we had the popping of the housing bubble and the subprime mortgage crisis and the subsequent recession. In 2000, we had the popping of the dot-com bubble and the subsequent recession. In 1994, we had the Mexican peso crisis. In 1987, we had the Black Monday stock market crash. I think that was the largest one-day decline in the stock market in history. I think there was areas like in Hong Kong, the stock market was down 40%, and in most of the developed markets, it was down 20 to 30%. In 1984, we had continental Illinois going bankrupt, which at its time was the largest bankruptcy. And in 1981, we had the stock market crash and subsequent recession. So whenever we approach this danger line, we get some kind of market event and sometimes a recession. Now let's have a look at the recent examples of surging yields and see how this compares with the stock market. So we'll have a look at 2018, we'll have a look at 2007, and we'll have a look at 2000. And we compare it with stocks. So as you can see, in two of the three examples, the topping of yields has signalled a big stock market crash. In 2000, it signalled the topping of the stock market with about a 6-month lead. In 2007, it signalled the topping of the stock market with about a 3-month lead. And then in 2018, the stock market was already crashing, but a year after yields topped, we got the COVID event and the big stock market crash, which itself was a significant event. So should yields top, there is a good chance that it could signal the topping of the stock market with a bit of a lead time. So hopefully it will give us a bit of time to prepare for the topping of the stock market. That's the hope anyway. But what happens is that when there is significant distress in the markets and when it's likely that the stock market is going to crash and we go into a recession, the central bankers sense this and they have to lower interest rates. And that's what causes stocks to top. And when they lower interest rates, quite often that gives the stock market one final boost and then it finally rolls over to die. So it all sounds very negative really, and it looks like there's nowhere good to hide. But let's have a look at the bright spots. Let's have a look at gold and see how that compares with rising yields. So as we can see here, when the yields top, we get a significant move in gold. So in 2000, this was actually the start of gold's big bull run. We got a massive rise in gold as it came up. And then in 2007, we got a big spike higher in gold. We then got a bit of a sell-off when the actual recession hit and people sold everything, including gold, just to raise cash. But gold carried on with its rise and then eventually peaked in 2011. Then we can have a look in 2018. This also marked the turning point for gold and gold went on an absolute tear and eventually into its peak in 2020. So if we were to see the yields top here, I think again we could expect gold to go on a massive tear. Now what's good to consider is that the past 6 months or so, gold has performed very well, and that is in the backdrop of surging yields and a very strong dollar. Now what's going to happen when the dollar isn't as strong, or when yields stop surging and start rolling over? Well, gold's going to perform amazingly well. But before that, I'm not suggesting that yields are going to top now. Maybe they could trend higher. But when we get that first sign of distress in the markets and the Fed has to pivot, that's when it's going to launch. So potentially gold could remain range bound, or maybe it could trend a little bit lower until that point. But we're certainly getting close to the top in yields. And when that top comes, gold is going to launch. That's all I'm going to cover today. Good luck with your investing. Pip pip. Bye bye.